Hello, good night. I am Jade and this is Financial Fitness JA Snippets. One of my most recent questions to date, as at I think a few days ago, the market is down, and this is all being it's assumed that this is coming from the increase in yields on the US 10-year Treasury note, and this has led to some downside on the equity side because there's been a reallocation of funds. People are now seeking to be invested back in bonds again because they see where the yield is trending up. So you see a shift again where there was a shift into equities to the growth stocks. There's now a shift out going to bond yields. People are expecting some kind of inflation despite Fed action. So what you see people doing is moving to what is perceived as the safer investments going forward. So what I have seen personally on my personal account is I've been hit by at least, I would say, over 10%. I think it's 10%. No, 10% or less. Between 7 and 10% I've been hit on my account. But I do not consider it a hit because I do not intend to sell any of my investments. The reality is that from time to time you have to have the expectation that market dynamics will shift, but you would need to focus more so on your investments and fundamental shifts in the businesses that you have invested in. Of course, there will always be the issue of asset allocation and how the larger players are positioning themselves in the market and how that may impact the market in terms of the 50-50 split between bonds and equity, or the 60-40, or vice versa for whether the bonds or equity, their shift in terms of how they allocate. This will lead to some price depression or some price increases as you go along. But as long as the fundamental analysis remains the same and the fundamental situation remains the same, we should all stand firm in a time like this where we see a pullback on equities. For me, it's actually an opportunity to get invested even more in the markets. So what I am doing is taking whatever funds I have in excess and looking to invest in some of my stronger plays in a more substantial way, given that the prices are depressed and I still have the same level of conviction. So my advice in these tumultuous times, if you have investments already and you're participating in the US stock market in terms of investments, hold firm, because at Financial Fitness JA we don't encourage trading per se. I know a lot of people are into that, but that is not the approach we encourage. If you are invested, you will not have a worry because you did not expect anything to come about for the next 3 to 5 years. Corona has probably shifted some of these earnings or these profits forward, but the reality remains the same. You're going to stick it to your investments unless the fundamentals change. So that is what I'm doing with my portfolio now, coming out of the most recent hike in the 5 and 10 year treasury bond yields increase. I think it's a big move actually. I think it's 130 basis points move, which is very significant. So people are preparing, even locally in Jamaica, we'll see where interest rates are going to start making some kind of adjustments, and yields are going to start adjusting to compensate for the impact that the so-called risk-free investment of the world is now pushing up on yields. So my investment thesis remains the same. Stay invested, keep abreast, maintain that as long as the fundamental position of your equity and your investment hasn't changed, you won't change. And if it does, you will, don't get married to your investments. But that's where I'm at, coming out of this change in yield and the move being made in the markets overseas, guys.